Traders TV. In today's episode, we're going to be talking about Forex terminology and what words like cable, Kiwi and Aussie actually mean. So let's get started. So here is your essential Forex terminology. The first one is this, and you may already be familiar. When traders talk about going long, this basically represents buyers who are trading a potential move higher. Short. This represents sellers who are trading a potential move lower. Your bid price is actually your sell price on your broker platform. Your ask price will be the buy price that you can buy at. The difference between the bid and ask price is called your spread. Okay, so if you are going to go long, then typically you'll be getting in at the buy price, which is your ask price. If you're looking to go short because you believe the market was going to move lower, then you'll be getting in at the sell price, your bid price. The difference between that is the spread. Higher volatility markets that aren't as traded as much have a higher spread. Higher liquidity markets, which are heavily traded, like the euro dollar or dollar yen, typically have lower spreads. The term bottoming basically means a market that has potentially stopped moving lower and is at risk of a move higher. A topping formation is a market that has potentially stopped moving higher and is at a risk of moving lower. So these are some general terminology that traders use. There are some specific Forex trader terminology phrases that are also quite useful to know. Let's have a look at those. So the first one is CABLE, which represents the British pound against a US dollar exchange rate. Then you have your cross rates, which are currency pairs that basically don't involve the US dollar. PIP is going to be your price in point, which is the measure of a price movement. We have the Loonie, which represents the Canadian dollar. And the Loonie, it's called the Loonie because of the bird on the Canadian coin. And actually CABLE is called CABLE because of the cables, communication cables, that connect the United Kingdom to the United States. Hence why it's used to describe the British pound against the US dollar exchange rate. We also have the likes of Aussie, which is the Australian dollar, Kiwi, which is the New Zealand dollar, Swissy, which is the Swiss franc, Yen, which is the Japanese yen, and the greenback, which is typically the US dollar. So these are more specific Forex terms that every trader knows and can be quite useful if you are hearing them in the media, news announcements, reports, and things like that. So now you know a little more terminology about the foreign exchange market. If you want to learn a little bit more about Learn to Trade and who we are, then click on the link below. Thanks for watching, and I'll see you next time.